I'm just listening to you talk, man.
Yeah, I'm glad. I was just looking. I'm looking at the SPY right now. We got this bilateral pattern forming, which is kind of suggesting we could go down, could go up. I'm bullish because we're above the range for the day still. I think we could move higher. We didn't really have a bad CPI read.
I mean, that could be a bull flag with a flagpole coming up. I don't know.
Mm-hmm.
I don't
I
know all
wouldn't
those.
short it.
I don't know all those pennant rules. It's got to be so much proportions and so much angle and blah 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 blah.
Yeah.
It's not one of the patterns I follow. Even though I kind of I learned all this stuff years ago. Didn't work for me, so I learned other stuff. But hey.
Yeah. Well, and this is like a pattern that like I've seen break down more often than not, especially when the 200-day moving average is down here. Like
Yeah,
if
it
we were
seems like
closer,
it seems like a fake out more than like a lot of people look at it as a bull flag and it's going to get continuation if it works, but I've seen it probably fail more often than not. At
that's
least when
what
when I try to do, or it'll pop up and then drop.
that's exactly right. Like it'll break above this trend line and then trap you in if you go long and then pull you back. But I mean, I'd love to just see a nice melt up today, especially with not a bad CPI report, like at all. Like it came in. I was just
Man,
looking at it. It
have you
came
looked
in
at
flat.
Netflix today? Have you looked at Netflix today?
No. Oh boy.
Check this out.
Woo.
Guess
Oh my gosh.
guess who's been saying it's going toward 1,000 for weeks?
Is that you? Have you been saying that?
Yeah, yeah.
Look at you, man. That's a great call.
One of my members is like super happy because he bought 1,200 puts and he's up like almost 15
Oh,
grand or something like that today.
yeah. He's up a
He's like,
lot.
he's like, go baby, go.
Yeah. Heck yeah. That's a good trade. Probably going to go down here to like 1171 if we want to
Yeah, I
break.
mean, if we break down, it could come all the way down into that, like I said, 1,000 area.
There's a little bit of divergence here, but not a lot.
Yeah, I have an intermediate support right at 1,100, 1,120, and then if we kind of complete the pattern, which is the drop off of the July high, if we kind of copy that initial drop from the current high, here in September, we could come all the way
Mhm.
down into that $1,000 area. It's just a copy of a
I'm
move type thing.
gonna pull an Alex Reed here and draw a demand zone. Might
Hey,
see might see that.
there's Kane. How you doing,
Hey,
Kane?
Kane.
I'm doing great. How are you guys?
Yeah,
Oh,
we're just
we are.
talking a little shop.
Yeah, talking a little shop.
What?
Jeffrey called out Netflix, and look at that. Nice
Nice.
red day for Netflix here. But strangely enough, the rest of the market's just
Ripping.
trailing to the upside. Just, yeah,
Yeah,
ripping. So, well, here I'll.
it's no holding it down. I do feel like we're getting near a top, at least where we're going to consolidate or just baby pull back for now. But yeah, today is definitely up.
Oh, yeah. They they established that at what, like 730 with that the nice pump from CPI. Or
Yep.
actually, it didn't even pump at 730, did it? It kind of had a muted reaction and then it just bounced.
It depends on your time zone, but yeah.
Oh, yeah. Well, 830.
Kane's out there on the West Coast.
Yeah.
He's
It
like,
happened a little earlier than that for me. Yeah.
try 530, bud.
Uh, anyway, I kind of told my story last time I was on here with you, Kane. I'd love to hear yours a little bit and just know where you're coming from if you want to start there.
Sure. Yeah. Everything that I'm seeing in the market, so I can share my screen. Um, I just pulled up Netflix because you were talking about it. And this is my new Gamma software that is going to be, we're going to be telling everyone all about it this weekend. So if you guys are interested in learning about it, I'm sure we can drop in a link for you guys, or maybe I'll do it in just a little bit. Jeffrey is talking about how there's downward movement in Netflix, and this clearly shows up on the Gamma. So gamma exposure is showing these major gamma levels, and it looks like there's even more room to go. This is what we call a gamma, sort of like a gamma ladder. So we see increasing gamma exposure moving down. This one's not quite as large as that one, but even so, what this means, what this shows us is risk to the market maker. And if the market maker has risk, they have to hedge their risk. Another really interesting thing about Netflix is it's at what we call this max pain point right now, which means that the market maker is going to be heavily incentivized to start hedging at this particular point in time. So if this moves downward, what it means is that they stand to lose a lot of money, all the way down to 1180. So what they're going to be doing is they're going to be selling Netflix underlying stock in order to hedge all of those puts that they sold. So remember that they didn't have a choice here. A whole bunch of people bought 1180 puts, and the market maker has to sell it to them. That's their role as the market maker. So they don't get a choice in their position. So what they can do, though, is they can hedge themselves. And in order to protect themselves against this move, they're going to be selling Netflix shares into 1180. And if they sell a significant amount of them, then that's going to help drive the price downwards. It's almost like a self-fulfilling prophecy. So over here, we can see that they have $34 million of exposure, okay? And that's currently equating to about only 29,000 shares, which doesn't sound like a lot, but it'll ramp up. The more we get closer to that, the faster that number of shares is going to ramp up. And then if we cross 1180, then you're going to see them dumping even more shares into 1170 and then 1160. And then what we see right here is that not so much below that. So we can set a target, right? This gives us a target. Hey, the chances are reasonably good that the market maker is going to help us move towards 1180 pretty quickly. And if it happens to break through 1180, then we're going to move fairly quickly with the market maker's help to 1170 and 1160. I don't know how those levels lined up on the chart that Jeffrey was just sharing, because I didn't hop in time to catch your levels, but it'd be interesting to see how those line up with what you're talking about.
I was talking about a bigger move down to near 1,000, but bigger picture too, not just not just this week.
So if we look beyond, there's currently no one's buying puts at 1,000 at the moment, but we do have some exposure down here at 1,100 or 1,100, 1,110, and 1,080. There's some. So hey, I mean, there are some people who are supporting a move downwards. That's pretty cool.
Yeah, I have an intermediate support. Yeah. That's what he's saying, 1180.
Yeah. Okay.
That's the level that I just drew, was 1180.
Okay, perfect. Yeah, that's exactly where that gamma puck is. Yeah. So I love it when things line up, because there's a reason why these levels show up. A lot of people we draw the lines in the technicals, but the technicals become technicals for a reason. And right now, the market maker is driving those decisions, and sorry, not the market maker. The positioning in the options market is driving those decisions, and the market maker is going to be just adds gas to the fire if we start moving in that direction. Yeah.
Well, and John just asked a really good question in the chat. He's like, I thought market makers would buy shares to offset the risk of their sold puts.
Yeah, some cases they do, but some cases they don't. It's depends on the regime we're in. Isn't that right, Kane?
That's absolutely correct. That's absolutely correct. So it just depends on how this exposure showed up. Okay, so if we were in if you're in a positive GEX environment, then that would be true. They would be cushioning it a little bit. But if you're in a negative GEX environment, then they're going to accelerate it. And we are in a negative GEX environment right now. Yeah.
When he says GEX. When he says GEX, he means gamma exposure. That's kind of the shorthand way to say it. And he's talking about a long gamma regime or a short gamma regime. In short gamma, the market maker is actually trading with the direction of the stock, versus a long gamma, they're trading counter to the direction of the stock. Right. And it's important to know which regime you're in a case like this in Netflix right here, because the market maker can exasperate the moves.
Yeah. And those are the ones that are most exciting, right? Those are the ones that, hey, the market maker is helping push the stock in the direction I want it to go, which just means that I get to make money a little bit faster than if they weren't there helping me.
And even if we're in a short gamma regime, it doesn't necessarily mean the stock will go down faster. It can mean it goes up faster too. That means for offsetting calls, they're buying stock. And when they're offsetting puts, they're shorting stock. So they're just helping the moves exasperate. That's why if you ever hear somebody in the mainstream media talk about S&P going into a short gamma regime, it's kind of a fluke that it makes it onto TV. But if you ever hear that, that means that the market makers are actually exasperating and helping volatility increase more.
I was going to say I've never heard any media outlet talk about gamma exposure before, but it'd be interesting the day that that starts happening.
Well, it just depends on which media you listen to. No,
Jeff Returnmeyer, the broadcasting system, yeah.
But that I don't necessarily listen to the majors that show up on TV, that like CNBC or anything like that. I do listen to some other networks that do talk a little bit off of the beaten path, but
Gotcha.
Sometimes you hear about them, talking about things like that, but it's especially when you get the Nigerians popping on there, they'll talk about stuff like that sometimes.
Oh, gotcha. Yeah. Those guys do like to talk options. So you asked a little earlier, so I thought we'd take a quick look at SPY. Why is not SPY not showing up? There we go. That's weird. And what? So basically, we can get an idea of where options participants are positioned and what they're expecting, and then whether or not the market maker is going to support any movement in that direction. So this is overall, what's cool is we can do it by expiration as well. If I want to fine slice it by next week, for example, I could do that, but this is all across all expirations. And what we see here is that overall, it's a positive GEX picture. You can see that these bars are way bigger than these bars right here, but we can see that there is probably going to find support at 640 if we do start moving lower. But right now we are at 657 and the largest gamma exposure is right there at 660. So overall, the way that options are positioned in the market is an expectation that we are going to float higher to 660. If we make it past 660, there is plenty of support for it to go higher to 665. And then as we go on, we could see more support. You could see this 670 grow. And we should be able to see, well, so far only up to 670. So basically the market, at least the options players in the market, are positioning themselves overall for a larger move upwards, a lot more likely than a move downwards. And even if we move downwards, that 642 looks like, or 640 is looking like a pretty strong support area. And if I can find my charts, I need I need more screens, I guess.
Never have enough.
That's right. Let's see where SPY is, where 640 on SPY would be. Okay. 640 on SPY. Okay, that's not a terrible move. That's a baby pullback. That's probably 2 to 3%. So that's not, so basically what we're saying is even the options market, and you can see that there's a pretty important level right here in terms of a support. So and by the time it does get down there, you may even have that MA50 as a support as well. So basically what we're saying is that the market expectation is to stay in a bullish environment, because even if we get a pullback, this uptrend would still very much be intact.
That's really cool. Can you show us gold?
Gold?
Yeah.
Sure. The ETF gold or?
Yeah, GLD. Sean is asking to see, he's like, does this work with commodities? I'm like, well, I'm sure it does.
It does.
In any
Absolutely.
options market, right?
Correct. Yeah. Yeah. Anything that has options. So, futures, index futures, there'll be options. And
yeah, I feel like S&P is interesting. All the indexes are kind of interesting because they have multiple instruments that trade too. So it's not just SPY, it also has SPX, and then there's also the futures market that has options. It gets to be a very, very interesting constellation of tickers that are involved when you talk about SPY.
Yeah, yeah. So I always flip back and forth between SPY and SPX, and even XSP, even though it has a lot less volume, a lot less options traded on it. Normally, that if any of them are going to be wrong, XSP is it's going to be wrong. And then you have this interplay between SPY and SPX, and then the way that the market maker hedges an index is in the futures market. So they can't go buy underlying SPX. They have to hedge themselves in the futures market. So gold here, there is a nice gamma pocket right there, 340, nice and prominent, much larger than all the rest, and a little bit of a support there at 330.
And the gamma is positive too, right? On gold?
Positive gamma. Yep, positive gamma.
That's really cool.
Well, anything else you guys want to look at? Or Jeffrey, you had something prepared that you wanted to look at?
I mean, I just came on to this, you were scheduled to be on here. I was just scheduled to pop on and play sidekick. I was actually asking at the headline there. I don't really know much about you. We've been on a couple shows, but I'd love to hear how you got to where you are. I think the audience may find that interesting too.
Sure. Yeah. Okay. Wasn't expecting to give my biography, but why not?
No, I mean, last time we talked to me and how I got to be where I am, but I'd love to hear a little bit about how you got where you are.
Sure. Yeah. So I basically through school and education, I was a math major. So I did applied math, and computer science. I did a minor in basically biology for medical sciences as well. And I actually thought I was going to be a medical doctor. And I ended up last minute switching over to an MBA program. And so I went and I did MBA in finance, and then I got hired on as an analyst, a collateral analyst in residential mortgage-backed securities. So my first job ever was as an analyst in MBS, and then I very quickly got promoted. So during my Wall Street career, I averaged a promotion once every 9 months, which is pretty fast in that type of environment, probably in any environment actually, but in a cutthroat environment like Wall Street, that was pretty fast. And I very quickly made my way to a CMBS desk, commercial mortgage-backed securities. That was in 2007. And you guys know what happened in 2007, and you know what was blamed for what happened in 2007. It was exactly CMBX, CDX, CDS, all of the credit default swaps, basically options for mortgage-backed, especially commercial mortgage-backed securities. And that's exactly what I was trading. So I had a front row seat of exactly how everything melted down. And the firm that I was working for actually folded and got bought off by Bank of America. And then I left and I went to PIMCO. And on PIMCO, I quickly worked my way up to a portfolio management desk. I was trading 200 billion a day. I was helping manage 1.7 trillion in assets. And then I got kind of tired of the life and it just wasn't that fulfilling for me to basically make a whole bunch of rich people even richer. And it was all money there. It was all money. All anyone ever cared about was money. No one cared about you as a person. No one cared about your health. No one cared about your life. No one cared about anything. And so I decided that wasn't for me. That wasn't an environment that I wanted to be a part of. And so I decided to leave. And so that was my professional career in the markets and how I got started.
Yeah. How'd you find your way into trading though? Like teaching people how to trade?
It just kind of organically grew. So after I left PIMCO, I was just happily managing my own money. And then friends would ask, and then they would refer like, oh, can you teach my kids? And can you teach, and people just started coming to me, can you teach this and that? And this group of people. And then so finally I very slowly started to make my own YouTube channel and just started to share some of my ideas. And then I got connected with Roger, and I was actually thinking about starting my own hedge fund. And so I connected with Roger. I said, hey, I'm thinking about starting my own hedge fund. I know you've done this before. Like what should be, what are the things I should look out for? What are the things that I need in order to get started? And he sat down with me and he's like, don't do it. I was just basically telling, don't do it. Don't.
Don't trade opium.
Yeah. Yeah. And he convinced me. He said, hey, why don't you just do publishing? You get into the publishing world. People would love to learn and they love to see the ideas that you have from the institutional world, because there's not a lot of people from institutions who are out teaching and giving insight into that world. Most of them retire, right? Most of them stay in that world. They collect their tens of millions and then they retire and they just manage their own money. So, yeah, why not?
I I don't know how much you remember, but I came at it a whole different way. I've
Yep.
never worked anywhere, Wall Street or otherwise, just all self-taught. And so I have a whole different perspective on a lot of theories and a lot of things I've figured out myself on different ways, alternative views maybe on how everything works. But so I love to talk to people that have worked in the industry and just validate some ideas. So that's and I love talking to Jack as a market maker, just
Yep.
validating some of the things I've figured out along the way too. So
Yeah,
it's
always
always
great
fun
to
for
get
me.
different perspectives. I love talking to you, Jeffrey, because you come from such a different background, but obviously you figured some things out and you're very successful at it. So like getting your perspective from a non-Wall Street perspective is always great, because one of the things that I acknowledge that I'm not really in touch with is what the common person sees or looks at when they look at the market. For me, it's like, oh yeah, it's clearly this, and then it's hard for me to go, oh well, other people are looking at it like this. So
Yeah. It's I've struggled with that a lot too, because I don't necessarily I'm a little bit on the autism spectrum, and I don't necessarily identify with just everybody, but I am self-taught, so I do identify with that self-taught type of person that did other stuff most of their life. I came up running a family engineering business, so whereas you were in the mortgage-backed security portion of the 2008 financial crisis, I was actually in the developer side of that whole thing.
there you go.
Trying to build subdivisions, trying to get houses built. And a lot of my clients, some of them went bankrupt, some of them sat on houses for 15 years, and we're just now finishing up those subdivisions right now at the next top. And
Yeah.
it's just been a wild ride, knowing different sides of everything that happened here.
Yeah,
And
one of the most interesting conversations I had while I was in that world and all of that was happening was one of my clients, or one of our clients, was the largest producer of cement in the world, a multi-billionaire. And he came in to talk to us about what was going on in markets and in the portfolios. And his whole attitude about everything was just so different than what we were seeing everywhere else. He's so one of just to start out the conversation, one of the guys asked him like, "Oh, so how's everything going in your businesses? And how's everything going for you?" He's like, "Yeah, it's great." And we're looking at him going like, "What are you talking about? Like, how can you're cement? Like you're the cement guy. How can you be doing great?" And his attitude was just like, "Oh, like don't you see what's going on in the economy?" And he goes, "Yeah, I just decided not to participate in all of that." Okay. I wish I could decide not to participate in all of that.
Yeah. It's kind of interesting. I had clients that were they started seeing the writing on the wall. They had bought up all these things in the fallout of the dot-com era, and they bought up all these properties and stuff like that. And then starting about 2006, they started offloading office buildings and stuff like that. People were this was peak investment. Everybody was hyped up still, and they were like, these are getting too hot. These are overvalued. The value grew way faster than, what we projected. So we're going to sell them off. And then they were sitting on a ton of cash come 2008, 9, and started buying up property again. And
Nice.
these guys just have impeccable timing for that. I've commented to them several years, like, how do you all they're like, it's just all in the value. Like when the properties are overvalued, you just get sell it to somebody else. And then invariably when everything comes apart, you just buy it back. So they just look at value, and it's, not focused on FOMO and fear of missing out and, how high could it go? They just look at the real numbers. And I think a lot of that applies in the stock market too.
It does. So the major difference is that in the property markets, it's not nearly as liquid. And so
Right.
they're used to sitting on it and watching it and looking at things like value rather than like, oh, Netflix dropped 5% today. Like they don't have that transparency of price that we get in the market. So it's easier to develop that mindset. And then
Yeah.
if you could take that mindset and translate it over into paper asset markets, then you'll do really, really well. Farmers are really good also.
Yeah, they come up, those guys come talk to me all the time. They're like, oh, you're so good at the stock market stuff. We can't get anything right in the market. Yeah, they're just looking at it, too broad picture, I think. And they look at the micro moves, and, it affects everybody. The fear of losing money and the greed of missing out.
Yep.
I talked to Jack a lot about the economy and the stock market work totally opposite. If you've ever taken economics 101, supply and demand, supply goes up, prices, they go down.
Mm.
Whereas in the stock market, when prices go up, demand goes up. It's completely opposite.
That's true. Yeah.
And I think that's one reason why a lot of people have trouble applying economic news and principles to the stock market, is because they work opposite. And
Yeah.
that's
Yeah. So they don't
lot of,
recognize the human element that's inside of the human emotion element that is inside of the stock market.
a lot of people get stuck in that trap, I think, especially when you listen to all the mainstream media, because they love to, the inflation went up, it ticked up 0.1% today, and blah blah blah, and then stock market's ripping, right? So
Yep.
is it because of rate cuts next week? I don't know. We'll see. We'll see.
Um,
Looks like you had a couple people ask, like, how about MDT? If you want to pull that one up on your GEX scanner,
sure.
Mike Delta Tango.
I was actually in one of my programs, we just exited MDT. It's got a nice gamma pocket right there, right at 95. Looks like there's room to move upwards to 97.5 or 100. So it looks like a good trade. The reason why I exited it, I don't know if people who asked about it are in my service, but the reason why I exited it is because it looks like we're near a top in the market. And even if it's just like a 3-day pullback, a very shallow 3-day pullback or pause, then I'm holding it tomorrow, I'm holding it through the weekend, and I'm holding it a couple more days before I expect it to move back upwards. And that's a lot of time decay to hold on to if you have a short expiration. So that all figures into your decision making when it comes to an options position.
Let's see. I was trying to see if I saw another one, somebody asking about.
Somebody
I'll
wanted to
see it.
see TSM.
TSM, yeah.
That's a good one.
So,
I like TSM. That
do
one's
you?
gonna, yeah. I mean, it's because Nvidia, there's something going on, and I can't remember. I'm probably gonna get this wrong, but like TSM's still making their chips in Taiwan, and I don't think Nvidia is doing that anymore. I think they're moving here to the U.S., aren't they? Or is that the rumor? Maybe I'm wrong about that. I don't know.
NVIDIA uses chip, makers. They don't make their own. They don't own their own fabs right now.
Oh,
So
I got you. Does TSM own their own fabs?
yeah.
That could be why.
In fact, NVIDIA uses TSM to produce a lot of their chips.
Yeah, that would make sense because Nvidia hasn't broke out yet. Yet TSM is going higher.
Yeah. So it was interesting because when we looked right here, there's a gap up right on TSM a couple days ago. It gapped up basically perfectly into a gamma pocket right there. So a lot of times you can pin at a gamma pocket, especially if you have a gap. So gap, what tends to happen is, especially if there's a large bar, this isn't super big, but you might get stuck as inside days for a couple of days at least to consolidate, meaning that you'll be limited by the high of this bar and the low of this bar. And after we work through that liquidity, then it'll decide if it'll go up or down. And gamma, exposure is implying that it could go up. That there is support down here at 250, but if we see interest come into 270, 280, and this gamma exposure increasing, then that would imply a move upwards into 270 and 280.
Another interesting one to look at, Open Door Technologies, OPEN, has an option volume 6.7 times its normal volume today.
Okay.
Yeah. Yeah, that's a good stock right there. Open.
So I wonder what strikes it went into. Oh wow. Okay. So
It's up like 70% today.
yeah.
76.
And so
Yeah.
what we see is right there, the large gamma pocket is at 10. And so that's where we are right now.
Yeah,
So
we're
again,
kinda sitting right there.
yeah. So rush towards the gamma pocket, and then it looks like it'll pin there. And so what we'll expect is that it'll take a while probably for that to work itself out, and then either drop or continue higher.
Meme gamble that seems to be paying out. I mean,
I don't think that's a meme. They just got a new CEO of like Shopify, right? I mean, look at the volume compared to what it was. Because if you look at the long time frame, like they used to be worth like 30 plus a share.
yeah.
Oh wow.
And see the volume now, it's like crazy.
Yeah, it's huge compared to back here. Yeah.
I don't know. I think that could be a real mover. It used to be a penny stock. And yeah, there's potential.
You know, I mean, if the reward risk ratios stay like this, I mean, and you're just guessing at a 50-50, does it matter if your reward risk ratio is like 20 to 1?
I don't know.
How would you make money with GEX specifically? Okay, great. So I'll show you guys. In my post-market live stream on Tuesday, I identified OKLO as an opportunity. I liked it technically. I liked the way that it was setting up. And so I said, okay, well, I'm going to take a look at the gamma exposure to see if I have market maker support and participation in this move. So we went in here and we saw on OKLO that there was a major gamma pocket at 80. Okay, so remember at the time it's trading at about 74, right, near the close. And so you see this large gamma pocket at 80, and then I want to know when that gamma pocket disappears, because that will give me an idea of when market participants expect that we could reach that level. Okay, so if I go out to Friday, which is tomorrow, it's still there. And if I go out a little bit further to the following week, oops, I did that wrong. It's there, but it's not quite the same intensity, okay? The right here was 9.48 million, and over here, and this might be different now than it was a couple days ago, but over here it was, well, it says only 2.2 million. Okay, so basically, that doesn't make sense. Oh, no, sorry. Yeah, okay, that means negative GEX fell off. Negative GEX fell off this Friday, which supports a move upwards, right? Because this is a positive gamma environment, not a negative gamma environment. So that implies that market maker will in order to get that negative GEX to balance it out, they're going to be buying buying the underlying, right? So that implied move upwards towards 80, I felt that it could happen by Friday. And so I went into a very short-term trade. I chose the September 19th expiration. I only wanted to hold this for 3 days, and I was going to target 80. When I looked at the chart at the time, I said, well, yes, 80 is possible, but you know what? It had a little bit of trouble over there around here a couple times. And so why don't I just put my target at 79, a little bit under that GEX exposure right there. And then yesterday, someone in the post market show, they asked me, do you still feel good about OKLO because it did kind of drop. See, this close is below the open. And so how do you feel about OKLO? I say, well, it's still trading within my plan. And today we hit the target, right? So that high right there is at 80 points. So it did hit its gamma pocket. So because I chose a short-term trade, I actually went a little bit in the money because I didn't want to take a big risk. I could have gone out of the money. I could have gone at the money. I went a little bit in the money at 73 strike call when it was trading at 74. So I went one strike in the money, and that one paid out. So I exited somewhere between 79 and 80 today, and it paid out about 80% gain in 2 days. So that's one way that you can find opportunities. The software also has a scanner, so I can run a scanner, and I'm going to sort it by percent volume to GEX. So the higher this number is, the more desperate the market maker will be to cover their exposure. And this shows me that it could become a significant portion of volume. The higher the percentage this is, this more significant percentage of the potential volume it's going to be. So I like to do ones that are, if I'm doing shorter term, then I'm going to look for a smaller ATR multiple, which is why we have this filtered, I believe, below 2. Yeah, less than 2x. And so let's take a look. If I, for example, I don't know, ECL, why not? Okay, nice big gamma pocket right there at 280. And that's pretty clean. There's not a lot of other gamma structure up here, okay? There's very few strikes actually have gamma exposure, which is kind of interesting. That's not, I mean, for a $280 stock or $270 stock, for all of the gamma to be concentrated in this kind of narrow, I guess they're 10 apart also. That's probably why. But we've got 280 right here. And if I look at ECL, okay, it's looking like it might have bounced off of that MA90, okay, and then now it's moving above the MA50. It's moving above the EMA8. It looks like it is going to come up and challenge that EMA20. And so if I like this setup, I can say, okay, well, the market maker is probably going to help it move all the way up to 280. And so I can target 280. And then I probably want to know what type of time frame. So I want to see where this 280 is concentrated in terms of, so does it drop off? It's not going to happen by tomorrow. So let me check October. Okay, October, it's there. And then let's see if it changes as I add more expirations. And most likely what's going to happen is it's just going to increase a little bit. Yeah. And so it's there, it's still there. So because that exposure is there in October, then there's a chance that we can hit it by October. What does it mean? It means that there's a lot of participants, and you notice how that bar didn't really change that much when I added December. Well, that means there's a lot of participants who have the October expiration, and so they're expecting that this move could happen by October 17th. And in fact, it would have to move higher than that by October 17th because they pay a premium, and this is the strike that they bought. So whatever premium they paid, if they paid $10 premium in order to get in on this, then this has to move to 290. If they only paid $2 premium, then it has to move to 282 in order for them to break even. So the implication is that it would go higher than that, but the market maker is not going to help it go higher. The market maker is only going to help it go to the strike. So that's why I like to put my targets at or just below the gamma pocket. So there's an opportunity for you guys right there.
I was looking up a few of my, I kind of subscribe to a gamma exposure tool, and I wonder if you could look up a couple just to digest, see one bullish, one bearish. As far as bearish goes, PepsiCo, PEP.
So I always like, I always still look at the chart. We still want to see that it is bumping against its MA 200. So this could go either way, right? If it breaks out, it could be pretty good because it did try to break out already and failed, but this could just be a retest and a bounce, or it could just really break down. So we'll see what gamma implies. That's actually a pretty interesting case. Okay, and so the larger gamma.
Yeah. I thought we'd talk about something interesting,
Right. And you see that the major gamma is below at 140. And so market participants are expecting to push further down, and then the market maker could help it get to that 140, but this is pretty strong. So what we're saying here is that could go down to 140, but that could also act as a support because actually we do have some gamma over here. So what we would do is we could target that 140. And when it gets there, we would see if these had increased or not. And if they haven't, or if they even decreased, and these have increased, then we would expect a bounce off of that 140. But if these increase down here and these shrink, then we would expect that this might get broken. And if it breaks, then we would expect a further downside move.
And then as far as the bullish goes, Costco seems to have a positive expectancy.
Okay, Costco.
Even though potentially in a negative gamma regime.
Yeah, okay. So again, with this failed breakout of that MA 200, came back down, now it's sitting at that MA 50. And so if we didn't have gamma to help us, we might be thinking, okay, well, at least short term, it could trade back up to that MA 200. So let's see what we've got here.
Thinking.
Yeah, it's a lot of data. Like people don't realize how much data it crunches. Like these things, in my own software on my own personal computer, used to take, on average 20 seconds just to generate a basic chart, not even get all the information that you're getting over here. So Costco, yeah, the major gamma exposure is up here at 980. Okay, so, and 980 is up here, back above the MA 200. So it's actually implying a cross back up over the MA 200. This 950 there as support is reasonably large as well. So there's two ways. Either you target the 980 and then just think that it's going to bounce from here off of that MA 90, but we also have support at that 950. So it could move down to the 950 and then bounce and move upwards. And we're also coming up near that earnings report. So that could, depending on how that goes, that could completely shift the gamma picture as well.
Yeah. It's interesting, right?
Yeah, it is. Okay, so is there something that you want to look at or talk about, Jeff? I know you've got, you're going to do a presentation a little later.
Yeah, my presentation's in crypto. If you want to look up IBIT, we can start just kind of scratching on some crypto tickers that have options. And we're gonna dive into crypto a little more. Two of my big ones right now, IBIT and ETHA, as far as BlackRock runs, and then we can look at some of the stocks related, like Mara and Riot. Riot definitely gets some positive action today.
Riot, yeah. I was looking at Riot yesterday. I regret not making a decision on it, but take a look at that. IBIT, definitely huge gamma pocket right up there at 70. We're trading at 65 right now. That's the major one right there, and very, very little exposure to the downside. So this is definitely top heavy. So market participants are definitely expecting this to go higher, and we do have a bit of a ladder here. So if we break through this, you've got 75, you've got 80 in the in sight, and what was I going to say? The fact that we're heavily leaned in this direction, then the market maker could be helping push. Are we in a positive? Okay, so we're in positive gex. So when we get there, since this is so big, it might be sticky for a little bit.
Yeah.
So once we get there, it might stick and then it'll consolidate, and then we'll see that the picture will likely change. And then so either it'll reject or go higher. But this looks more like a pin. We can count on this maybe pinning at 70 for a while.
Yeah, I thought 70 to 73 would be a resistance technically, and then probably 80, maybe where we top out ultimately, on into later in the fall.
Okay,
So
there you go. Well, the gamma is showing the 70 for sure. And looks like it's showing 80 as well. So this one, we don't show the full spectrum because it just too much data. It gets too cluttered, and at this point, you can't even see the price right here. So that's why we give you this second chart right here. So you can see there is definitely gamma up at here at 80 as well. So, really good people who can read price action. They can see, the hidden gex within the structure over here. And, Jeffrey's proving that right now, that it's actually, that it is an actual real market force that doesn't necessarily show up directly on the charts. But if you're good at what you do and you're good at reading price action, you can get really good at guessing where those gamma exposure levels are going to be.
yeah, I've used the gamma exposures as a kind of a confirmation. It's kind of interesting. You started out saying that in the very beginning, when different technical analysis lines up. I've always looked at it as kind of a confluence of different ideas, and when they come together at the same prices, it tends to reinforce that price might actually go to those places. So
Yeah, yeah,
it's interesting.
it is for sure. All right. All right. Do you want to take over the scroll, or do you want to look at ET?
Let's look at
ETHA?
ETHA, yeah, Ethereum. You've got the Gex tool here, and it's kind of fascinating. And I know you're getting ready for your big launch this weekend, so I want to show this
Yeah.
off a little bit for everybody. It's a fascinating tool. I don't have access to it yet myself, so
Oh, well, we should get you access for sure.
yeah.
But
I
yeah,
love this stuff. I love this stuff. I figured it out on my own, completely on my own. So
yeah, yeah. So we got the same thing going on right here. We got a major exposure here at 35. A nice, beautiful ladder right here. This could go run up all the way. At least Gex is showing so far up to 45 potentially.
I've been on this one personally. I've been selling short puts at 33 for like 4 weeks in a row, and just raking in premium like $1 a week.
Wow.
It's just been absolute crazy.
Yeah.
I haven't gotten put yet either, so it'll be interesting to see.
I mean, if you get put, it doesn't look like that'd be a terrible thing either. So
Yeah.
one that I'm in right now that I've been slowly collecting shares on is BMNR. Are you familiar with that one?
Yeah, I do know about all these. I don't trade this one. At least I haven't traded it.
Uh, they're kind of positioning themselves to be the MSTR of Ethereum.
Yeah.
So I thought they were kind of interesting. But we got some gamma exposure up here at 50, and same thing, same time. I mean, you wouldn't if they're heavily tied to Ethereum, you would expect that they show similar types of gamma exposure.
Yeah, I think SBET was trying to compete in that realm too, trying to do the Ethereum treasury thing. A couple months ago, I changed over and was like, altcoins may not be the big runner this year. Maybe these treasury companies is the big thing that
Yeah,
actually plays this cycle. And
that's the thesis I've been operating on. Yeah.
so all these treasuries, now you've got one, Trump Media starting up a SPAC to buy Crypto.com's coin. That's a
Seriously.
new treasury that's coming on the market here, also. So
Oh, wow.
there's lots of these coming out all of a sudden, and I think there's a Solana one that's getting ready to spin up, and there's maybe an XRP one getting ready to spin up. So this will be interesting.
Yeah.
You want to pull up that riot chart real quick?
Yeah, Riot. Yeah.
And giving back a little bit, looks like.
Yeah, it's got plenty of. So it made it past this 15. That'll act as support. This has plenty of juice. It could easily get up to 20, 22, 23.
Yeah, let's contrast that with Mara. A lot of people are like, "Why is Riot moving and Mara's stuck in the mud?" And let's just compare the gamma exposure.
Yeah, why not?
We got the tool.
Yep. So clear gamma right where we are. So pinning. So we're pinning at this super big exposure here. And if we move upward, it could go to 17, but not nearly the same as Riot, right? Where we had the huge bars right here. So it looks like Mara could have trouble getting past 16 for a while.
Yeah, just kind of pinned in with all the options volume that's sitting there.
Yep.
So it's kind of interesting how the option market sometimes can wag the underlying.
Exactly, and it's happening more and more, right? The number of shares controlled on a daily basis has reached about 40%. So 40% of all shares being transacted are because of the options being transacted, which is crazy.
It's an interesting time that we're in. I think this has not been the case before. Just recently, that the options market actually starts controlling the underlying, and we're seeing that occur more and more, especially on the big downturns the S&P's had the last couple of years with all the 0-day options. It kind of acts as an interesting force.
Yeah. With the advent of those 0 DTEs, that was a big change in the market. That definitely made like options an important force inside the markets.
Yeah, a couple of people want you to look at BTBT, which there's not going to be a lot there probably because it's so low priced. But
right, yeah. All right, $3.
Yeah,
there you go. $3, a little bit at 3.5 and 4.
Yeah, not a whole lot. And then Hive, somebody else wanted to look at that one. Looks like in the chat.
Yeah, we got to look at Hive because that one's a mover. I've been watching that one for years.
Okay.
I'm serious. It was like a penny stock. They did a split, and now they're breaking out again.
Yeah, so they made it past the 3. With the past the 3, frees them up to move up to 3.5 and then 4. Like 3.5 doesn't have that much exposure to it, so probably won't get too much of a pause at 3.5. It looks like it could be headed towards 4 without too much resistance.
There you go, everybody.
Beautiful. Just what I needed to hear.
The one we're looking at right now is Hive, HIVE. Yeah. Cool.
Yeah, if anybody has any other they want to look at, we're open for right now. We're just talking kind of crypto because it's interesting right now. There's not options on crypto, but with all these tickers and ETFs and companies that are becoming treasuries, there are more and more opportunities to do this.
Yeah.
And question, does your tool cover futures at all?
I don't know if we turned on the data for futures. Let's find out. I'm pretty sure we haven't because is this
got a little something? I don't know.
No. This is the equity. Unfortunately, got excited for a second. No, we haven't turned on the data stream for futures, and I don't think for indices yet. Also, because the data for those is extremely expensive.
I was gonna say expensive.
Yes, really, really expensive. So we wanted to roll out first, and then we'll start adding it in.
Yeah, I know. CME is proud of their information.
Yeah, yes, they are. Yeah. Are we going to there? Yes, we plan to. Yes, it's just not in the first rollout. We didn't add that in.
And then let's see. I was looking for more crypto stuff we could possibly look at.
You checked out XRP, XXRP?
XXRP or X?
Yeah, XXRP.
It doesn't have many options, but
yeah. If it doesn't have options or if it has very low options, then it's not going to be. Oh, okay. Well, you got some, but
a little bit of stuff.
Yeah. So But look at the GEX, right? So yeah, yes, we have bars, yes, we have data, but it's only 143,000 in exposure. So this will help you in terms of seeing where players are positioned, but the market maker is not going to be helping you get up here or move up here. So it's kind of on its own. It's not, you're not going to get that big push from the market maker hedging itself.
So that's an interesting question. Just it's not really from anything, but for me personally, do you find that like GEX per dollar or GEX per volume or GEX per, like market cap matters more, or is it just kind of like stands on its own?
It stands on its own, but if you want like the really fast moves, which are juicier in terms of options, because you get that volatility and you don't have to deal with as much time decay. So if you want those really fast moves, then you do want to see the large GEX where the market maker will be forced to hedge a significant number of shares.
Yeah, I've often thought about it like you look at something like SPY and you get a $10 million GEX, but then you compare it to something like Riot with a $10 million GEX, and
There
that's
you
not
go.
apples
Yep,
to apples at all.
exactly.
Um, and that's kind of where I was with that question. A lot of people look at, $10 million GEX. You're looking at this one with 143,000. I mean, like a player could come into the market with 143,000 bucks and buy like
Yeah.
they could control all the gamma exposure right there. So the options are
Yep.
not really wagging this stock at all, is kind of my
Correct.
point here.
Yeah.
And
Yeah. Exactly. Yeah. 10 million on Riot is definitely different than 10 million on SPY. Yeah. Like, the amount of hedging that you would need to do in order to cover 10 million SPY is a drop in the bucket of the volume that takes place in a given day. So you wouldn't expect that the price to be affected all that much. But on Riot, on the other hand, how many shares does Riot even transact in a single day? It looks like the volume is, I can't even see it, about 21 million shares. So 10 million can represent maybe a quarter of the entire volume for a given day. So that could definitely get affected.
yeah, hopefully that helps people understand a little bit about how your GEX numbers play into actual meaningful numbers for a stock.
Yeah, 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 yeah.
I know us nerdier types can get a little bit away from what normal people think about.
That's right. Yeah, we like it just because you're like, oh, this is really cool and interesting. But yeah, when we actually do want to translate it into money making opportunities.
Yeah, yeah. So just because you see big bars on Kane's tool here, and they look like, oh man, look at those giant levels. You have to put it in perspective with the volume of daily transaction on that stock and whether that's actually a meaningful volume or size of gamma exposure compared to what transacts on that stock. What he's saying is, on SPY, $10 million, that's a drop in the bucket. That probably happens in every 5 minutes or something, or even less on SPY when you consider SPY and SPX and the futures and we're talking about a few seconds of volume to absorb
Yeah,
a $10 million GEX. But
yeah,
on something that's much lower volume, it's going to take like a quarter of the day to get that kind of volume
yeah.
to support
So
that. So
if we look at XXRP right here, the average volume has been about 1.6 million shares. And if we're talking about the current price move from 37, or just call that 38 to 39, that's probably 1/3 of 1%, or no, I'm sorry, 3%. So when a 1% move is only 13,000 shares. So it's not going to be anything.
right. So hopefully that helps people understand. If you got some value out of that conversation right there, let us know in the chat. I like to provide value for everybody. So
There you go. Yeah, and that's also why on the GEX scanner, when we scanned, I said I like to sort by, and actually I asked the developers to sort by percent volume to GEX. The higher percentage this is, the more likely it is that market maker is going to move the market in a big way when they start hedging.
There you go, everybody. Now that kind of ties it back full circle for everybody, I think, right there. You know, when you started out there, it didn't mean anything, but now I think we've added
Right,
context.
yeah.
We've added some
Yeah.
context to it, I think, and hopefully
There you
that
go.
helps everybody.
Yeah.
It's a really
Yeah.
cool tool. I'm really excited about this, Kane. I've kind of played with this for on and off for probably almost 8 years myself. So, uh, yeah, I love this nerdy stuff. I actually pull some of the gamma data out and do it in a spreadsheet and graph it in 3 dimensions for
There you go.
stocks, so I can
Yeah.
see the change in the time frame.
Yep.
A 3 dimensional chart's the only way I know to visualize that.
Yeah, I asked them to put that in, but it didn't make it in this first round of development. It will be for sure in the very next update. We'll have those 3D charts. My personal software has it, but it just didn't make it in this first round of development.
Yeah, I love that stuff. I found particularly in the SPY series of options. You know, it's funny you were mentioning XSP being the weird child out, because there's actually a divot that occurs in the GEX charts for XSP about
Ah,
30 days out in time frame. It dips. And it's in the futures, it's in SPX, but it's most tradable in XSP. And
interesting.
I have a 86-0 win rate trading it.
Nice. I
So
like the sound of that.
yeah, it's just one of those little weird little anomalies that I found in the market that I couldn't really explain. Found it, somebody pointed it out. They were like, I do this futures trade, and I don't know why it works, but it works every time I do it. And I had to figure out what it was that was happening, and I found that little gamma exposure divot. It's supposed to be a big, nice little. For anybody that doesn't know, it almost looks like a bell curve, but it's weird when you plot it all out. And
Yep.
so if you find anomalies in it where it's not nice and smooth, those are opportunities to potentially make money. So, um,
I like it.
put on my
Is that
put
what
on
you're
my nerd
gonna
hat there.
you gonna tell us more about that? Because that'd
No,
be super
that's
cool.
not the one I have today. That's
Okay.
my green light income alert. But when you brought up this tool, I just had to talk about it. I mean, if anybody would find that interesting, I thought it might be you.
Yeah,
Um,
I'm definitely gonna have to take a closer look at that. That's really cool.
Yeah, it's right around, between the 20 and 30, I think it's between 20 and 35 days is usually where it's hanging out, and it's on the put side. It's not on the call side. It's only
Yeah.
in the put side, right around that, and it's in almost every single S&P 500 option that I found. When you graph it, it shows up. It's
Wow.
sometimes it's really, really shallow, but when it gets big, that's when you can trade it and make money.
There you go. Yeah. Okay. I'll
So
definitely take a look. Yeah.